Ladies and gentlemen, AMC closed down 5.44% in the red. GameStop closed down over 1.3% also in the red. After spectacular news, what in the hell is going on, ladies and gentlemen? They are trying to break your soul. Long story short, they are scared of this possible momentum that is starting to form with AMC stock. And I have one thing to say for them. They're fucked. That's it. It's a matter of time. Nobody knows exactly when. That's the whole guessing game of this. But the situation does look better than not, and I do want to go over everything you need to know revolving the news for the day, the data that came out, the technical analysis for AMC, the option flows, the short interest, what the markets are pricing in as far as the next Fed meeting May 4th for a 0.25% or a 0.5% rate hike. Let's get into all of this key information. The only thing that I ask, you hit the like button and subscribe to the channel and source your comments, questions, or concerns down below in the comment section. Thank you guys for doing that. And also get those free stocks with Mumu. And if you guys want to come trade with us live in real time, link down below in the pinned comment. We keep it nice and affordable over there so as many people are able to join as humanly possible. Now let's talk about exactly what happened today. So we did get some economic data that did come out. We did get the unemployment rate that came out, and that came in at 3.6%. The estimate was 3.7%, and this is really a bad thing for the markets. It's good for the overall economy, but when you're heading into a very uncertain rate hike cycle, we could get a shit ton of rate hikes. We could get 15 rate hikes this year, or we could get 6 or 7. That's really the difference here, and each of these data points makes a big difference to the overall Fed's decision to raise rates more aggressively or not as aggressively. And as you guys already do know, as we reported in the video earlier, the 5 and 30-year yield curves have inverted and they are starting to get worse, meaning you will get paid out more for a 5-year treasury than a 30-year treasury. If you put your money up for 3 years or 30 years, I hope you would expect to get paid more money than if you put your money up for 5 years. So that's why it's definitely a sign that things are not right, as well as the 2 and 10 year. Those are inverted. Basically, all of the bonds and the indicators that economists look forward to as far as predicting a recession are flashing recession signals. So that's kind of starting to scare the markets a little bit. Don't underestimate the market's ability to say, hey, yes, we're going into a recession, but we still want to own growth stocks. When the economy slows down and there's no growth, people want to own growth stocks. That's ultimately probably a good thing for your portfolios, but don't underestimate the market's philosophy here. Like, hey, we know a recession's coming, but we're gonna buy the dip out of the markets until that recession does come. That's likely, what is going to happen, and that did play a role into the moves in the markets we did see today. Now, as far as the other data point, that was actually the non-farm payrolls, and that came in a little bit less than expected at about 431,000. It was expected to come out at 490,000. So that was a little bit of a good thing, little bit of a bad thing as far as the unemployment rate going down as far as the markets are concerned. I think that's why you've seen a lot of that choppiness back and forth. We were down close to 0.5% at one point. We closed up 0.3%. So we're not moving 2% in a day right now. Volume is lower. Spring break is here. People are not really active in the markets for the most part, right? You see this around holidays, around Christmas, around Thanksgiving, not really Halloween because that's not really a real vacation time of the year, but nonetheless, that's why you're seeing smaller moves in the markets. It does not mean volatility is not here. It is actually here to stay for a very long time. And we're going to wrap all of this together with what is going on with AMC as well. But we are getting the probability for a 0.5% rate hike now at 72.7%. Probability for a 0.25% rate hike at 27.3%. Now we have 4 weeks, 4 days, 21 hours, and 34 minutes until the next Fed rate decision. And that is on May 4th. Now, the markets might not pay attention to this right now, but we have not seen probabilities for a 0.5% rate hike this high in years, in a very long time. So the markets, they're not really paying attention to this right now, I believe, because there's a lot of time left until the next meeting. But as this stays up longer, people are going to start talking about that again. And it would not surprise me to see the markets go through a couple days of panic because, hey, the Fed's going to raise rates a 0.5%. 1%. I really don't think the markets are fully pricing that in right now. They're moving as if everything is fine in the world, or for the most part is fine, and we know that is not the case. So that's really it as far as what you guys need to know. As far as Russia and Ukraine, nothing significant has come out so far about those potential peace talks. So we'll wait and see exactly what happens if we get any new information on that. The markets will react to that on Monday. As far as AMC and the Ortex data shorts, they are indeed not covering. As we do know, borrowed shares of 5 million for the day, return shares of 3.42 million. That is a net short position of 1.58 million shares for the day. Short interest of free float at 20.71%. Current shares that are sold short of 106.71 million. Cost of borrow max going up again at 5.84%. Utilization at 100% and days cover at 2.44%. Even more important than that, we know shorts need to cover. I like to see what is the short-term momentum as far as AMC with institutional investors. And for the day, we've seen 33 orders totaling $15.01 million. Positive order value of 55%. So it's still more bullish than not. But today was Friday. Today was the first quarter of Q2. So it was an overall slower day. I want to see how this money does start to position around. And it looks like they are starting to buy the markets, but not quite fully there yet. For comparison, the MOC imbalance today was $3 billion to the buy side. Yesterday, it was $10 billion to the sell side. So there's a lot of money on the sidelines that is still waiting to get back into the markets. And on average, retail puts about $1.1 billion into the stock market every single day. So I'm waiting to see where this money does get positioned for Q2. We do have earnings coming up, and that's going to be a main focus of investors coming here in the short-term future. But overall, the biggest point here, I do not trust this rally that we have been seeing until fundamental changes happen, like the war in Ukraine and Russia ending, the inflation ticking to the downside, the Fed taking a less aggressive stance, or if we do get that Band-Aid pull, right? Imagine that. If you got a Band-Aid on you, or wax if you're a female, whatever it is, you get it ripped off. It hurts for a second, but then it's over. If we get the Fed that comes out and does a 50 basis point rate hike and the markets are fine with that, then that could actually be enough bad news that anything less than 0.5% could actually start to be seen as a positive. So until we see some kind of fundamental change and stabilization, I'll call it, to the markets, that's when I can become more bullish. But I'm not really seeing any big reason to be bullish right now, besides possibly the inverted yield curves. As aggressively bearish as that is for the next year or two, it could actually be very bullish for the next couple of months, possibly as long as the next year if we don't get a recession for another 2 years. I'm not exactly sure. It's all going to come down to good old earnings. Now, as far as what is actually going on for AMC and GameStop here today, I think there's a lot of that volatility back and forth. Some retail investors are probably getting spooked out of their positions. This is the glorious thing. I'm not talking about you or me. You know, you've had your shares, you're in your position, you're probably adding to your position. It does not matter, right? It matters when those people get back in. If they get in, they get out, that's fine. But when the big rally comes, when it's important to get money flowing into the stock to really get shorts covering, once we get back above 28, pushing 30, that's when you will see the momentum traders come back into the stock. And when we can get it into that momentum swing, like we kind of seen right here, and hopefully we don't get another manipulated halt, that's when you'll see people pile into AMC and GameStop in the millions of dollars and millions of people. Honestly, you're going to see a lot of people, whether they are institutional investors, hedge funds, or just retail investors, that pile into these stocks. As far as AMC is concerned, on the actual chart here, we did close slightly, it looks like, or about right on this trend line. So we didn't really break under that. We didn't come back down to $22 or $21. So I can't make any definitive conclusions here. It's just too close to call. Kind of like a football game. Sometimes they got some fucked up calls there. It's too hard to call at this current moment. We have broke under the 100-day moving average, but we're still on that upward trend line. So if we come and break out on Monday, you see we're with this trend line, you're really getting this diagonal triangle going on, this wedge here. So usually when you see that happen, If you're a day trader, you know exactly what I'm talking about. When you see the moving averages converge and the stock's bouncing off of both moving averages, once it picks a direction and breaks out of that divergence, you'll see it make a bigger move one way or the other, whether it's to the upside or the downside. So I expect the same thing here. If we can break out back up to the upside, break above $20.25 per share, you're probably going back to 30 relatively quickly. If we break under this coming on Monday, you're probably going back to about $21 per share. But again, it is too hard to actually call right now. But I do want to put this into perspective for you guys. Just a week ago, 2 weeks ago, we were struggling to break above $21 per share. We're still firmly above $21 per share. We're at $23.30 per share. So it's still been a very, very nice rally. And I don't think a big rally like that, especially on AMC stock, is really going to go away. And same thing with GameStop. GameStop has had a very impressive rally as well. And you can see they're hanging out about their 200-day moving average, finding a lot of support around that. So if you're in GameStop, that's what I would pay attention to if I were you. But we know GameStop had that split news as well as with a dividend. And it's one of those things where until we get more clarity on exactly what's going to happen, how valuable this is going to be for GameStop and potentially that sympathy with AMC, HYMC, or the other stocks that rally alongside GameStop, it's likely being seen as a short the stock moment. Buy the rumor, sell the news. Kind of the same thing. Once the news comes out, hype kind of settles down just a little bit. Retail put their money in. That's usually the time to come short the stock until you get more clarity on how big that dividend is going to be. If it's going to be a wildly big dividend, like half a share or even a fourth of a share or a fifth of a share, you're talking $20, $30 dividend here. That's going to be very, very big, and that's going to help squeeze shorts out of their short positions, because shorts, they are accountable for paying all and any dividends. So going to be very important. That's another big catalyst. We know that it's coming, more clarification on this dividend with GameStop. And we seen Adam Aron talk today about they're pretty much allocating $500 million to acquiring stakes in companies. And that's going to be very important. That's going to be a revolving line of catalysts. Pretty much every time AMC goes ahead and buys another stock, it's going to be a big catalyst, because it kind of de-risks AMC as long as they do it well, and it will also give them the potential to make a lot of upside on those transactions. So we'll have to wait and see. They've already proved their point with HYMC. That was already a very, very, very good buy. Now, as far as more of the technicals on AMC is concerned, if for whatever reason we break under 21, the next level is 1784. I don't necessarily think that is going to happen. I think if anything, you'll find a lot of support around $21 per share. It's AMC's year. It's been 2 years since all the theaters were open and they could actually operate as a normal business again. I would imagine 2022 is going to be a year of potentially the best profit rates that AMC has seen for a very long time, if not the entirety of their business. And I think that will boast well for the stock price. Now, as far as the MACD, that is still incredibly bullish. The RSI is at 58.29. So it's not really on the oversold, not really on the overbought side, almost heading back down to neutral. So this was a cool off that we need to see that next rally up. The volume for the day is at 65.25 million. So nothing too crazy as far as that. But yeah, just a quick message before we go ahead and end this video. Every single day, the MOAS does not happen and we do not see the next move to the upside is actually better and better. It means that the liquidity is being constricted even more. Like with my margin portfolios, I just got not a letter in the mail, but an email saying that they expect the Fed to raise rates by 0.5% May 4th. If that happens, the margin rate will go up another 0.5%. Now, it's not a big deal when you have margin of a couple, tens of thousands of dollars, but if you're talking tens of millions of dollars, that becomes a bigger deal than not. And the longer that happens, the more rate hikes we get. You're going to see margin rates by the time I think the MOAS will actually happen, end of summer, late fall. You're going to see margin rates upwards of possibly 5-6%. That's not going to be good considering that. Plus the cost of borrow rate is going to keep going up. It's going to be very hard for shorts to stay in their positions for the remainder of this year. So we'll see exactly what happens. That's pretty much all you guys need to know as far as the Max Payne for next week. Let's go ahead and give a sneak peek. $22 per share. It's not rocket science here. It doesn't always happen. Max Payne was $23 for today. We did close at $23.30. Sometimes it happens, sometimes it doesn't. Nonetheless, that's going to be all for this video. If you guys found value, if not, education, entertainment, whatever you guys found out of this video, hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. As well as that, if you guys want to come trade with us live in real time, the link for that is down below in the pinned comment, and follow me on Twitter if you guys have not already. But thank you guys for watching. Enjoy your weekend, and I'll see you in the next one.